The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this 27th day of July. July's almost gone. Unbelievable. Okay, so we're looking at the Dow up 54, 21,765 all-time high. We're looking at the E-mini, S&P September E-mini, all-time high. Made a high today of 2480.50, trading at 2478 right now, 5. What's really fascinating about this is that you've had a dichotomy, you've had a divergence between a number of things. That's what I want to talk about today. That's what I'll be talking about when the monthly candles finish for July, and my webinar starting on August the 2nd, Wednesday night, begins. It's a 2-series webinar. Within that context, if you want to sign up, if you are a subscriber, it's free. If you are not, you can get a 1-month trial. You'll be getting my newsletter, you'll be getting my recommendations, you'll be getting a lesson, because I'll be showing the Chapman Wave methodology on what we're looking at in great detail every day for the 2 weeks leading to the second webinar. I'll be talking about sector rotation. Can sector rotation buoy the market so that, yes, there's a minor pullback, but basically we're going to higher highs all the way through into 2018. Is there a chance that we can have a deeper correction? I'll be talking about that. I'll be talking about what could happen if all the key indices and sectors decide to come back down at the same time, or what would happen if there is that rotation and there are just enough sectors that are moving higher to support, and what levels we'll be looking at, and the relationship of the VIX going to an all-time low yesterday. And what about retail? I want to show certain retail stocks that could be holding up better, and that I'd spoken with Tommy Jr. I was sitting in for Tom O'Brien during the last hour with Tommy Jr., and we were having some really interesting discussions about the sector rotation, and Kevin came on. We were talking about Amazon. I mean, that's the title, Amazon, or the name Amazon really says it all, because it's been an absolute Amazon in the field of retail. Okay, so now what we're looking at is that the E-mini has gone to a leg D. In the Chapman Wave methodology, there's an easy objective. You identify the lowest low bar, and you merely want to count each successively higher peak, label them alphabetically in sequence, uppercase on the way up, lowercase on the way down, A, B, C, D. They can go E, F, and G. But what's really important is at D, other things can happen. And it's, I mean, over the 13 years or 12, 13 years I've been here, I don't know how many tens of thousands of times we've looked at Ds that had pretty serious implications. And if they don't, they can recycle to the upside, and the implications of a recycle are very important. So we've got leg D bumping up against some kind of resistance, but the MACD, the moving average convergence divergence, is still very strong. Not as strong as it was back in the June 19th high of 2451.50, but still very strong. And then we come back sharply to the 2402 level, be starting a brand new move to the upside, and the stochastic right now is at 92%. That's very strong, and they are a couple of indicators to say, hey, be a little careful here, because they are hinting that we could be pulling back soon, but soon doesn't mean today. It means soon at some point from right now. You got to be a little bit careful. Okay, weekly chart still only in leg E. And this is the 120-minute chart. Went to a peak F in the Chapman Wave at 2480.50 in the 120-minute bar. And the technicals are sort of fading, but the price is holding nicely above 2477, the 9-period exponential moving average. Okay, now let's get to the nitty-gritties quickly before we run out of time in this segment. I'd like to do it in this segment. Here we go. The Dow. And for subscribers, we still remain long, very long actually. The Dow, we were looking for that leg C, peak C, pullback, to rally to a leg D, and we've got that leg D. We're in D. It's just fractionally higher above the resistance line in the daily and the weekly. How it closes tomorrow, Friday, is going to be very important in the weekly chart, and we've gone to a leg E in the 120-minute chart, leg D in the weekly, leg E in the monthly. Support will be at any point over the next 3 sessions going into up to the 1st of August. Let's just say that 21,600 to 21,530 has to be the key support. I'm suspecting there is a chance that today the highs, we've seen the highs, that we could be bulling back into the close, a little bit stretched. Amazon comes out with its report after the bell. We'll get there. Let's go to the S&P, SPX.X. There we go. The S&P is up 4. So we've seen a divergence between the Qs that were leading on the way up and then led on the way down, and then the market held pretty well while the Qs were very weak with the SMHs and the XLK. Now what we've got is that the Qs are at all-time highs. The semiconductor index, which led basically on the way up and on the way down, is saying just be a little bit careful here, even if it's just shorter term. The S&P is in leg D. The Dow, because of Boeing yesterday, had a spectacular move to the upside. S&P didn't confirm that. Even today, we're looking at the Dow a little bit stronger than the S&P. So I don't like to see 30 stocks stronger than the 500. So we're going to be watching this closely, just on the short-term level. But the technicals are still good. Under 2470, something else is happening in the S&P. It could start to reverse down. Meantime, we're treating it as leg D is in place. We haven't even got a peak D so far. QQQ series, the NDX 100, leg C. Now, I'm calling this a blue C, meaning that it's a buy mode that should go in the Chapman wave to at least a D. And that's suggesting that Amazon comes out. What happens going into early next week is going to be very important. I suspect we will get the D. The MACD and the stochastic are still terribly strong. Not terribly, very strong. At 97.18 in the stochastic, it's going to take a lot to really decimate that stochastic, so it goes under 80%. So let's just say uptrend is still intact all the way around. We'll have to watch closely to see how there's a pullback, if it's just a pullback, or whether it's a serious turn to the downside. Looking at the IWM is the Russell 2000. It's made a peak E. Sort of struggling here, but it has walked the 9-period moving average in the daily. Leg F, I'm calling it F for now. In the weekly chart, leg D in the monthly. So we're getting into many areas that are saying, be careful, because the IYT, which is the transportation index, Larry Pesavento spoke about this earlier on. This is a serious pullback. It went to the 175s, and now it's 166s. Sharp pullback, and that's a hint to say be a little careful there, because the transportation average has given a confirmation of the Dow buy mode, but now it's saying, wait a minute, the last high was made in the Dow. The IYT transports didn't do that, and that's the XAL, which is at a really tough time. The ARCA airline index, look at this, gets smashed from the 122 level down to 110. It's at 112 right now. Peak D in the weekly, F in the daily, leg D in the monthly. So I'm saying this is the time to be a little bit cautious. Selectively long, yep, we only have long positions. We have no short positions in my opening call. We'll talk about gold, we'll talk about silver, we'll talk about copper, we'll talk about crude oil and bonds when we get back. Basil Chapman, Tiger Technicians Hour. Dow's up 55, S&P's up 3, almost 4. We're right.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Basil Chapman will be giving a 2-series webinar Wednesday, August 22nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018? Each time the market feels it's ready to have a sharp decline, formerly weak sectors rally to hold the market up. This 2-webinar series will be free for Basil's opening call subscribers, and non-subscribers will also receive his daily newsletter for 1 month free as a trial subscription. Sign up for a 30-day free trial to Basil's daily newsletter, The Opening Call, and gain access to his subscriber-only webinar on August 2nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018?
Hi everyone, this is Basil Chapman, and I'm looking forward to seeing you at my webinar series.
To sign up for a 30-day free trial to Basil's daily newsletter and gain access to Basil's webinar, visit the front page of TFNN.com.
David White has just announced a new online course that he'll be premiering to his subscribers the evening of July 26th, The Next Wild Wild West of Computing. Machine learning will be the biggest growth area for tech companies in the next 10 years. Make sure you're ready to capitalize on that opportunity. With over 50 types of algorithms and growing, Dave White will tell you why there are so many areas for companies to apply this to their business to both sell and consume. Right now, you can get a 30-day free trial to either of Dave's newsletters, Path of Least Resistance and The Technology Insider, as well as get a 30-day money-back guarantee when ordering Timing the Trade charts. Don't miss out on the next Wild Wild West of computing as it premieres July 26th for all subscribers to Dave White Services. For all the details and to sign up today, visit the front page of TFNN.com.
Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi folks, we're back. So we're looking at gold. Gold's up 8.5. Earlier on it was up 20. It actually hit 1271, was it? Let me just check that out. It hit 1271.3. Trading now 1264.1, and it's in leg D. Remember, D is where you've got to be a little bit careful. It doesn't mean to say to change anything. That's where you take your foot off the gas and you put your hover over the brake, because there could be a sharper pullback. And I'm looking at this and I'm suggesting to you that the dollar, and now, interesting, I had a question, a statement from Bob who said, let me see, he said, M. Macy's long? You said don't touch it. I did say don't touch it. And then I was looking at it, and I looked at certain candles. I mean, you don't know candles are going to form until they form. The reason why I'm mentioning that right now, I'm going to talk about the dollar candle in a moment. The reason why we've only just started a long position. So if at 2403, if you like what I'm suggesting, then obviously you can grab it right here. You're not missing all that much. But let me just show you what I'm talking about. My assessment was that these two little doji candles, because the pullback that occurred right there on the 24th, went under the 9-period moving average, but the MACD continued higher and the stochastic continued higher. I said to myself, wait a minute, those two candles, look at the candle forming that has formed in the weekly chart of Macy's from the 14th. And now look at the candles that forming from what I call the silent doji of last month to this month. I think it's worth an attempt to play Macy's as a counter-trend rally. And the way I'm looking at it, there's a really good chance it's coming back to test the 2250 area. It's at 2403, no matter what happens. But I like the risk, that's all. So what happened is, as I assessed it more and more, as I figured out what's going on with Amazon and all, I said, you know what? retail is still a place people want to go. So that's really my thinking. I hope that helps you. So, yeah, I remember that distinctly I did say that. But as I was assessing it, I liked the risk reward. That's really what I was trying to talk about. Okay, let's go back to so gold. The reason why I'm talking about it, you see gold's candle here in leg D. MACD is good. Stochastics at 86% good. But what I'm really looking at is how does the 200 period moving average and 9 period moving average in the mid to low 1250s, how does that hold on support? If it goes right through it, that says to me, keep watching. Now, I know Steve Rhodes likes to talk about the yen when he's talking about gold because absolutely the patterns match so well. But I love to look at it in relation. I've done it for so long. I just feel I got a sense of it that the dollar relationship and gold relationship, where for about 6 or 8 weeks twice over a period of a year, do they move in the same direction, not the same proportion. Otherwise, they usually move in counterpoint. So I'm looking at this and I'm saying, you know, the candle that's forming in the dollar with those two little attempts 4 days ago, 3 days ago, to form some kind of a doji candle and reverse up and then failing yesterday. Today is the day where it's hit the 93.30s, the 200 period exponential moving average that I've been talking about for so long. In the arch formation, in the left side, right side price time match to the low that was made back in the week of the 24th of February. The week of 24th of June, I'm sorry. It's a year. And I'm looking at it, I'm saying, you know what? Just over a year. This is the chance for the dollar to at least have a bounce. And if that bounce works, it says that gold could just be stuck in a range. No, it doesn't have to break down. It's not going to really power into the 1270s. And that's really what I'm saying. Okay, that's that question. So there's silver. Look, silver right now in leg C, leg B still. It's a very nice. Technically, it's a much nicer daily pattern than gold daily pattern because it's only in B and it's still acting very well. But the weekly chart says, gee, you know, it's struggling at the 1650s. It's at 1668 right now. Let's see how it holds over the next few days. That's really what I'm saying. I don't think it's a breakdown yet in silver. It's a nice leg A up, leg B up, and the MACD and stochastic are confirming. So daily, it's a little better than gold. Weekly, it's a little worse than gold. Now we want to go to crude oil. Crude oil is up 9 cents at 48.85. Leg C starting to bump into resistance. Still looks quite good. MACD is good. Stochastic is good. I'm suggesting to you that the move that we're looking at in the weekly chart is going to be so important tomorrow, Friday, because if there's a pullback to the 47.50 or lower area tomorrow, that's going to say or by Monday, that's going to say one thing. If it tests the green up Chapman wave inside wedge resistance line of 49.60 and breaks above it, that's going to say something else entirely. So crude oil, same situation as gold. Just it's had a nice move off the lows. I need veracity to say it's moving into the 51 area. Fabulous move rather than just being stuck in the 48s. So let's just watch it closely. Question about... So that was that. TLT. It's almost the same story. TLT is at 123.14. It really is trying to make an H pattern, successful H pattern, but the bonds are going to be really important. And at this point, down 58 cents at 123.90. I'll just make it clear. When I finally get some kind of a sell in the market, and as I say, we are long the Dow. If we finally get, and we have long positions only, no shorts. If we finally get some kind of a sell signal in the Dow, there's a good chance that T bonds will rally and yields will come down as money goes from equity risk into the so-called safety of fixed income. All right? So I hope that's a little bit clear as to what I'm looking at. High-grade copper. High-grade copper is at a fabulous move up. It's in leg F. I'm calling it an F. It really could have recycled. Strong leg D in the weekly chart, leg D in the monthly chart. Copper is saying things are a lot better than they were earlier. Economically around the world, there must be some building going on to have copper up like this, and we're going to be watching it closely. I also mentioned to my subscribers CTA. Yes, this is Cintas Corporation Overalls Clothing. This has been a benchmark and an indicator for me for years and years about the economy. It rallied. It was looking lousy. Short term, we're having a high level consolidation, and then earnings come out in a spectacular move to the upside. For now, I'm just going to call it an E. I'm going to see if it can hold, but the stochastic's good, MACD's good, and I'm calling it a leg F, but it should be theoretically F/B in the daily, and that's going to be part of what we look at in my webinar. One is telling us that the economy, besides what you hear on the news, what is really working and what is not. Look at the IBB. Plummets from 400 down to 240, has a good spring back leg D in the monthly chart, sort of 325s, 332, sorry, 330 to 332 is really the area of strong resistance. Let's see how it does next week, because fund manager in this rotation, fund managers went right back into the IBB, the biotechs, because that's where they thought they could get a play, and so far they've been right. I'll be back. Basil Chapman, Tiger Technicians Hour. Dow's up 48, S&P's up 3, and we'll talk about, some good questions. We'll talk about Amazon, Facebook, Apple, Google, Microsoft. See you this weekend.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everyone. We're back. So the Dow's up 49, S&P's up 291. Okay, a couple of things that I wanted to do here. So I had a question about the SMHs and some of the semiconductors. So the SMH has gone to 87.88. the MACD is good, not anywhere close to where it was when it made the high on the 9th at 89.72. But, and the stochastic is at 88%, over 80% is good. So what I'm looking at here is 87.88 right now. If the semiconductor index takes out 86, it really has to be this candle, otherwise this can easily bounce. So 87 was the low yesterday. Let's so 86.25. A close below 86 by Wednesday week would suggest, regardless of where we go on the upside, would suggest that the semiconductor index is going to start making its way to the downside. If you look at Intel, and I had a question about Intel the other day, and I said, yeah, it could rally a little bit, maybe even to the 35, the 200 period moving average. It hit that today. It hit 35.25 in leg C. I'm calling this a counter trend bounce, at least for now. The daily is quite good technically, but it's not anywhere as close as it was when it made the high back in the 36s back in early June. So the weekly chart is saying, you know what, it's tough. This is just a bounce. This is the way I'm looking at it right now. So Intel goes into the 35.80s. That's outstanding action. It's only 50 cents, 50-something cents higher. But if it starts to pull back and goes under 34.20, 34, a point lower, a point higher, it's outstanding. A point lower, it says, not good at all. Look at advanced micro devices, and they really seem to be doing everything right lately in terms of their product lineup. But they have gone to a leg E in the monthly, a leg D in the weekly chart, and a peak E if there's no new high today in the dailies. I'm watching it real closely at 1443. It looks to me like it's kind of overbought. It needs to digest these big gains. Let's see. So those are the MU. I haven't looked at that for a little while. MU is Micron in a chop sideways up and down area. It's really just consolidating at 30.72. It has to break above 33 to really say, oh, I'm breaking out. And if it goes under 28.50, it's a real problem. So it's a 30.71 right now. And the last one in the group is I want to look at LRCX, which is Lam Research. Leg C, very strong, all-time high today. I think it's going to go to a D. That could buoy the SMHs just a little bit longer. But nothing wrong in the daily so far, technically. Nothing, and the weekly chart has not got the same kind of strength, technical strength as it had. Vale, question from Dana, what about wave count? What about it? I've got it as a G. I spent a little time on this over the last 3 days, since I noticed it made that gap to it. I'm calling it a G because of the way the MACD is acted. I'm completely wrong. And what will happen is if it goes above, it's at 9.47, up 8 cents. If Vale SA, if it takes out 9.66, goes above that, I can't even call it a recycle. I just have to call that a brand new leg B, and that's really positive. So right now, holding very well. If you're long, wait. The question was, good morning to you, Basil. Still looking good in my VIPS position. Oh yeah, congratulations. That did very nicely. VIPS in leg C to the upside, up 41 at 12.41. VIP Shop Holdings. Let's go back to Vale. Still looking good. Okay. I'm sure there are several looking at Vale. Yes, a lot of people ask me about Vale. I'm thinking of going along here of earnings with a tight stop just below today's low. Looks like it could push sharply lower and then rebound quick. It looks like it pushed sharply lower, then rebounded quickly. Is this the way? Is this on its way to 10.80 high of 316? Your thoughts on this are much appreciated. Dana Clearwater. So this is what I'm looking at. The weekly chart is saying the MACD is cross positive, the stochastic is rallying, and it's testing the 200-period exponential moving average. In this V-shape or cup-shaped formation, I'm always a little cautious. I like to err on the side of being cautious and say the 200-period exponential moving average, if it's getting there for the first time in a while, can act as a repellent. But if it hasn't been there, there you go. So look how long it's been since Vail broke the 200-period exponential moving average. Isn't it fascinating that you can say, based on the 200-period moving average, the breakdown of all the way through 2011 into February of 2012, where it broke under and then it treated the 200-period moving average as very strong term resistance. All of a sudden, you got that same aspect on the reverse side. It became resistance and a propeller and a magnet from January of this year. So it's creating another sine wave formation, suggesting, now let me open this up a little bit, suggesting that Vail, I've heard it pronounced both ways. I think Valet is the way most people pronounce it. There you are. That Valet is trying to make the 9-period moving average of 9.31 and the 200-period moving average of 9.43 some kind of a base in the daily chart, and it's a magnet and repellent in the weekly chart, and at some point in 2 weeks' time or 3 weeks' time, it should become a support level. So if you want to start a position, Dana, appreciating that it's really way off the low of 7 in the 760s, it's already 20. This is a big percentage move, what, 30% or something? I think it should be pulling back some. But I agree that it's starting to look way better, certainly in the weekly chart and even the monthly. So how about this? Start a small position, saying to yourself, I want a small position here, but I really would like to put one in. I'll just put a bit in and not even look at it at $8.90. If I don't get it, that's fine. The other one's going to do very nicely. But if it pulls back there, that really is the position where I would put in. If it comes back down, and the weekly chart is still, the stochastic is still rallying in the weekly chart, that'll be very good. So let's do that. And I've got a call coming in here with Comcast coming to check some of my equipment. I don't know if I can answer it. I won't answer it. Wow. If you called 1 minute late, I could have answered it. So what we're looking at here is I'm here. You can come at 12. There you are. How about that? So we've got the Valet starter position, but it's only a starter position. I believe you'll be able to buy it again at 931, even if it goes higher. My big question is, I don't want the big position now. I really think that there's going to be an arching over and that it's going to come back and test $9 to $8.80. So I would put in a buy somewhere in the lower area, somewhere, in the 880s. That's really the area I'd be looking at. Hope that helps you. Basil Chapman, Tiger Technicians Hour. I'll be back. And, at noon o'clock, I'll be expecting Comcast. All right, here we go. Nice. Dow's up 64, S&P's up 4. We'll be back straight after these important messages.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Trading is different than investing, but the opportunity to take advantage of short-term trends is only one if you get the direction right. Direction leveraged and inverse ETFs offer bold trades on U.S. and international stocks and bonds. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks, we're back. Now, here's my problem with the gold and the gold stocks. The stocks have not uniformly been acting as well as the price of gold, and this has been going on for days. And if you could choose the wrong gold stock, yet the gold itself has gone higher, and the gold stock could look great, and then all of a sudden, like GG, which is Gold Core Inc., trading at $12.85, down 94 cents, down 6.89%, was looking fantastic. The MACD was good, the stochastic was good, the price was good. It goes to leg C yesterday at 13, goes over the high of the 26 was at 1388. Yesterday goes to 1394. No, yesterday it did. And today goes to 1394. It looked fantastic. And then out of the blue, it pulls back. So in the den, S&P says GG CFO is leaving. Well, come on. So the big deal, the CFOs are leaving. Go down 7%, just like kaboom, just like that. It's really tough. And my favorite, which we don't often trade, I just like to look at it, is the South African gold company, ASA, which is based, I think, in Bermuda, but it's South African gold and precious metal stocks, trading 1181, down 13 cents, down 1. It hit the 200-period moving average and has pulled back at peak C. It hasn't moved in the monthly chart. A weekly chart looks terrible. Monthly chart also looks terrible. So that's what I'm saying. I'm a little suspicious of this gold move. I don't know why I am, but something doesn't feel right. I think the dollar is getting close to a pretty decent bounce. Let's look at the EUR-USD in leg D to the upside. Washington, remember, D's are where we get a little cautious. Leg F in the daily, I'm calling it F for now, and A in the weekly. That's exactly what you expect in the euro dollar, that H goes to an M, lowercase m, and then it has a big bounce. So it's getting a little bit overbought right now at 1.165. Watching it closely in the USD, JPY, it was down earlier, and now it is rallying. Yeah, now it's up a little bit at 111.58. If the dollar Japanese yen takes out 112.19, let's call it 112.30. If it goes above 112.30 in the next 2 days, that's going to be very good action. Counter trend, I'm talking counter trend until the technicals improve, but it's going to be very good action for 1, 2, 3, 4, 5, say for 5 or 6 trading days. more than a bounce because it's got a couple of good candles. Right now, it's just stuck. So any move below 1.10.61, and there's a problem. All right. So Gigi says VIX hit 8.84 yesterday, and now you're getting long when the Dow is in leg D. No. We were long. We went long after the pullback in C. So there's been a really nice percentage gain, and now we're in leg D. I'm raising the stop, being very cautious here. Yeah. No, point well taken. Believe me. I'm watching this closely. Let's look at XOP. XOP is, in fact, the oil S&P, Spider S&P Oil and Gas Fund. It made a double bottom, 29.90 to 29.92. So it makes a bottom back in June. It goes peak A, sharp move up, then it pulls back, has another move, makes a slightly higher low in an inverted V shape, and then it goes A, B, remember this is now the new A, B, C, and now it's gone to a D in a very long extended but not big price time. Yes, it's 29 something, let's call it 30 to the 33s, 10% move, but off lows, it's easy to make a 10% move. It's the pattern that we're looking at. Weekly chart says this is the first week, maybe tomorrow, that the XOP, trading at 32.63 up 5 cents, can actually close above the 9-period moving average. So that's why I'm saying we're right in an area of, we're in an area where we're looking at the relationship of patterns that I call inflect or deflect. Inflect means that you get to a level, maybe it's a moving average, and then you go right through it. You don't deflect away from it. And that's what we're looking at in many areas. So I'm looking at price points and moving averages and troughs and peaks and saying we're absolutely now in an area where the volatility can start to increase. Do you realize that the S&P futures for weeks now, only once or twice has it been down sharply? Most of the time it's just been either unchanged, slightly up, slightly down. This is so unusual. The compliance, the way that volatility is kind of being ignored right now says to me, wonderful, but start being careful. Start looking out for, look around the corners. So yeah, this is where I take my foot off the accelerator, hovering over the brake. Let's see what happens. Doesn't have to, because I'm still expecting the Qs to go peak C, maybe Amazon earnings do something or other, but whatever it is, I expect that we're very close to some kind of a consolidation. All right, now let's go on. We've got a couple of things I want to look at here. So the question came up, and I think this is a good question. ExxonMobil. And this is the one that I've said, it looks good, then it looks bad, then it looks good, but it's all in a low-level consolidation. High-level consolidation is when you break out to new highs or recovery highs, and then you consolidate within just a few percentage points and go sideways, but not breaking out, not breaking down, you're just kind of stuck. Well, that's the same thing in the downside with Exxon. Chevron's the same thing. Chevron pattern is just a little bit more positive, but it also says be careful. Then earlier on, when I was with Tommy in the Nadex platform show, we were looking at Verizon, spectacular move, up 312 at 47.52, and all of a sudden we've got action, and that says to me that the telecoms are probably still in an area where maybe as dividend stocks they have a better play than the oil service or the oil multinational oils like a Chevron or Exxon. There's more risk there, I think, than there is at this point. But I suspect that the communications area is going to see tremendous competition. I know I just haven't had time, but I'm going to be sitting down and saying, you know what? I'm paying just for the ease of service. For instance, I have an address based on the service that I have. All I have to do is change the address, and I could more than halve my monthly payments for all my different services. I haven't done it because it's just easier. People contact me so they know my email address, etc. But maybe, that's the way I'm starting to think that way. I mean, this is just, they're doing the same thing. So anyway, I think that at some point they're going to have some kind of an impact where people say, you know what, I've had it with all these different services. I don't need it anymore. I just need one. And do you need a landline? I still have a landline, but do you really need it? All right, that's a rhetorical question because I'll probably still keep it. So what my thoughts on X? So huge gap. Remember the huge gap in U.S. steel? I put it in here. I said, huge gap. Well, we fill some of the gap, not all of the gap. And my thinking was we probably won't fill all the gap, but we'll fill some of the gap. And then the test is not on the upside, but the test will be in the 24 to 23.50 area. So we'll talk about U.S. Steel X trading down 47 cents right now, 25.74, and it's leg D in the month in the weekly chart. I'll be back.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
All right, we're back. So what I'm looking at is U.S. Steel. It's going to be give us a good clue. The SLX is still doing very nicely. That's the steel ETF. For now, I'm just going to call it a leg F, a peak F to the upside. I'm watching it closely. I think we're getting very, very close to some kind of a little bit more serious of a pullback. We'll see how Amazon's going to help tonight. So in the meantime, make it real simple. The VIX index, trading right now at 922. 884 was the low yesterday, all-time low. I believe that in the high eights, it's getting very close to some kind of a balance. But there's a chance that after all these years actually, where I lowered the VIX numbers that I always look at slightly. I might have to lower them again. There's some kind of attrition that's going on here. So when I always talk about the 15s, maybe it's the 13s now that are going to have a greater impact. I'm not 100% sure. I think within the week, by the time I do my webinar, check the front page of TFNN, you'll see I'm doing a 2 webinar series over 2 weeks. Plus you get my newsletter and you get my daily calls. And we're looking at some very stark and significant areas of resistance coming up in many of the indices and support. So this is going to be a very important period. And if you think that we aren't ready for some kind of a pullback, then you want to see the Dow break into the 22,000s within the next few days. And that's going to say you've raised the base. You can have a pullback now, but you're raising the base. But at the same time, what we're looking at is that a number of sectors have really had a fantastic move to the upside. It's just they deserve a breather. That's really the issue. Do they breathe while the others take the opportunity? I'm watching those bears last night on National Public TV. While you've got one sector doing one thing, the other sector takes the opportunity to do something else. And that's really what we're going to be looking at here. How does the market hold up? Can it hold up? Are we due for more than an 8% correction? I'm going to be discussing those things. So just make it real simple. The Dow made an all-time high. It's in leg D. The QQQ series is in leg C. I suspect we will get a D. It's not often that you get a major failure at all-time highs in C in the daily. It's invariably a different count, and I don't see how I can make it a different count right now. So I'm calling this leg C, and I suspect by Monday or Tuesday we get that leg D, and then we've got to be somewhat careful. So we're about to wrap up. I just want to say one more time that the webinars, 2 webinar series that I'm doing, starting August the 2nd, Wednesday, you'll see all the information on the front page. But basically what I'm trying to do, and we've already started doing it, is we're under the radar. We've started to try to get positions in areas that could, in fact, survive some kind of a deeper pullback. We'll know very soon. But most importantly, I think that first week of August is going to give us a tremendous amount of information to say, hey, look at this. Just real quickly as we're about to wrap up. Look, Amazon, leg D, a huge, almost parabolic move in the daily and monthly chart. Weekly has had a fairly steady move up the 9 period moving average. So it looks fantastic, but it's getting somewhat overboard. Look at Facebook, same thing. So this is a leg D daily. This is leg E, gap up to the upside, up 750, and it made an all-time high in the 175s. Leg D weekly. And leg F, I'm calling it now for now, F in the monthly. So you can see as we go through these things, Google, Alphabet, hasn't been able to break above that peak F that was made a few weeks ago. Netflix, NFLX, Netflix, leg B in the day. I found that I really couldn't call it anything else at this point. And here again, maybe it chops around, and it just squeaks to a new all-time high. But the daily, the weekly, and the monthly are suggesting, hey, it's just time for some kind of a digestive phase. That's all I'm saying. I'll be back later on with Tom. Have a great day. Otherwise, see you tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.